Welcome back, everyone, for Wall Street Week Ahead. I'm your host, Vlad Karpel, and founder of Tradespoon. And back from a short vacation is my co-pilot today, Joe Cusick from Trading Block. We have been getting some great viewers' feedback, and Joe and I received one from a Tradespoon viewer, and I might add a client of both of ours, Steve from Denver. Steve have asked, how do you come up with the estimated moves for the week when you reference that an ETF is pricing in a potential move in the stock for, let's say, $1 this week? First of all, thanks, Steve, for this great question. And Joe, can we walk through how you come up with the estimated move calculation?
Yeah, definitely. So let's say that I want to get a feel for what a sector is about to do, and I want to look at specifically the one that's going to be most sensitive to the data that's due out this week. Let's take, for example, housing. It's highlighted on the screen with the red boxes, specifically the existing home sales and the new home sales. I want to look at the ETF that's going to track the data the best, and that's going to be the XHB. That's the S&P Home Builders ETF. The reason I'm going to look at this particular ETF is because the stocks that make up this ETF are builders and home suppliers like Masco, Home Depot, etc. Now let's look at the math for calculating the 1 week move. And the reason why I'm looking at the 1 week move, well, the data is this week. So the 7-day move is calculated, and this is really quick, easy math. Take the stock price, 30.85, multiply it times the implied volatility. I got that from tradingblock.com. And that's 0.1844. Divide that by the square root of 52 weeks. That's the square root of time. There's 52 weeks in a year. There's 7 days in a week. So that's 7.21. That gives me the price, the move that's being priced in there about 79 cents, which is around 2.5% price move for the week in XHB.
Steve, I hope this answers your question about estimated move. And if anyone has any questions regarding our content, please email us directly at info@tradespoon.com. Joe, what else does Wall Street Week Ahead have on tap?
You know, Vlad, I want to look at the consumer area and specifically the consumer discretionary area. And I'm going to use the XLY, the Consumer Discretionary Spider ETF. And the reason that this ETF, I want to use this ETF is because it's very sensitive to the consumer. And it has names in there like McDonald's, it has Starbucks, Amazon. And so let's look at the movement that's being priced in XLY right now. If you take the stock price right now, which was as of Friday, is 68.85. You multiply that times the implied volatility of 0.1096, and again, divide that by the square root of time. In this case, it's the square root of 52 weeks. That's 7.21. The pricing and the potential for this underlying to move about $1.05 this week, which is around 1.5% going into the consumer numbers that are going to be midweek. I want to look at one thing now. Hold on, this always skips one. I want to see what's going on towards the end of the week, right? With the Michigan sentiment that's coming out at the end of the week, we quite often say, well, it's just one of those sentiment indicators, who cares? Well, the overall market cares. And specifically, I'm going to look at the S&P 500. Now, you could look at the cash-settled SPX, but I like to use the spiders. It's very active, it's extremely liquid, and so we're going to look at the ETF that tracks the S&P 500, and that's going to be the spiders, SPY. They're pricing in right now, when I say the options marketplace is pricing in the potential movement of the stock. That's what we're referring to when we say this. And we're using option prices, that forward-looking component. That's giving us that indication. The 7-day move right now is being priced in around $2.38. We got that by taking the stock price, $200.92. Multiply that times the implied volatility of 0.0853, divided by 7.21. It's pricing in a 1.2% potential move this week. It doesn't seem astronomical, but there is so much out there right now of a very extended market. We want to keep an eye on this, and that's why we do this every week.
Yes. Joe, thanks for this great insight. And again, at Tradespoon, we believe in doing your homework and have a long-term conviction on the stock. And once you have a long-term conviction on the stock, if you use statistics, if you look at the historical volatility and implied volatility, which gives you a forward-looking prediction, you can make intelligent decisions and trade smarter. So if you want to learn about how to calculate estimated moves, check out our recording class by Joe in our archive. You can go to Tradespoon and go to training videos. And you can also look at the upcoming webinars to learn about this information and other great topics to make you a better investor. So I want to thank everybody for participating in this segment, and we will see you next week.